In today's video, we're talking all about how to trade supply and demand and how to recognize spots on the charts to find opportunities in Forex. How do you use supply and demand in your Forex trading, and how do you spot opportunities on the chart with this concept? What we all probably know is that the less supply there is of something, generally speaking, the higher the demand. And the more supply of something, generally speaking, the lower the demand. Let's give a very real quick real life example. Let's say you go to the grocery store and there's not a lot of bread on the shelves, right? We would say there's a very low supply and a very high demand. But if the stocks are fully shelved, that would be a simple example of a high supply and the demand is not super high. This concept actually exists in Forex trading and generally in trading. I want to start conceptually by an example. Before we start drawing a bunch of things on the chart, we could get ourselves all confused. Let's just conceptually speak about a simple concept or simple idea. Let's say that we are looking at a stock, right? So I know this is a currency related video for most of you guys, but let's just say that we're looking at a stock for a second. We all know what stocks are. They're, shares in a company. And let's say that a stock historically has been trading between a range, right? It's been trading between the $10 mark and the $20 mark. The reason that I want to conceptually talk about this before we jump into how to spot these trade setups is that this kind of concept is a pattern. It's something that we can recognize. And as traders, we are looking for patterns to pick up on and, more importantly, to ultimately profit from. What we notice about this simple example is that when price comes down to $10, the stock becomes a buy. And when stock rises up into the $20 mark, the stock becomes a sell. It's the simplest concept ever, but it's something that happens again and again in markets. And in this video, hopefully what we're going to discuss is how you can start recognizing these patterns and start putting them to use in your trading. So let's say that you're identifying the stock as a sell up there at the $20 mark. That is what we would consider to be, a high price. And at that point, we start to say, okay, well, historically, this has been a high price. So as it reaches that $20 mark again, I am looking to do what? Sell the stock, right? This is the simplest form of example of what we're about to talk about in today's video. The idea behind this is that what we would call up here, we would call overbought, okay, OB, and we would call this concept down here oversold. Now, this concept is something that it's like as old as human history, right? We've been talking about, this sort of stuff since the beginning of humankind. We've been talking about, merchants in the marketplace haggling over goods and services. Well, the modern day merchant is the market trader, right? So when we are looking at the markets, we are doing the same thing. We are identifying points where we would identify something as overbought and probably due to be sold, right? Time to book profits or short this or sell this, as opposed to when something gets to be a bargain, we are looking for oversold examples. Now, it's not as simple as this. Just because you identify something like this does not mean you're going to be, making millions of dollars or anything like that. But this is the basis of the entire video that we are about to talk about. So we've got this concept. Let's clear the screen and let's talk about this in a candlestick pattern example. Obviously, as price action traders, what we are looking for is candlesticks that will tell us a little bit of the story here. Now, again, going back to our example, we are looking for examples on the chart where the chart is telling us that a certain area is considered overbought or oversold. And even though we identified this very simple example, I want you to envision this candlestick as a story that we just saw in a single candle. So for example, let's go take a look at a very simple example. Let's zoom in right here for a second and let's talk about what we are seeing, because before we start identifying trade setups, and we're going to get to that, we're going to talk about later in this video how to set up trades based on this idea. But I really want to make sure that you guys are getting this concept here from a conceptual standpoint so that you understand what we are actually trying to identify as price action traders. So here's the thing. Let's look at the story of what's happening in these candlesticks for a second. Okay, so we've got the USD Canadian dollar. So we're looking at the dollar against the Canadian dollar, the quote here, or the exchange. What we're seeing, I want you to look at these candles here on the left, and then we'll take a second look at the candles on the right. And I want you, to identify with me here what we are seeing. What we're seeing here with an open, of course, what this candle is saying, this is the open, right? And we'll zoom in here on the edit so that you can see. This is the close, okay? So the open, the close, and this is the high, and you can barely see the low. What I want you to recognize with this single candle is the story that it is telling us. What kind of information is this candle telling us about the market? It's telling us that around this particular area, which happens to be 1.2515, let's call it, the market said, hey, this area is a bargain. And not only did it say it there, it continued to say it for the next few candles, followed by a huge jump up right around here. So what is this little portion of the market telling us? What is the story here? The market is telling us with this candle specifically that the market is a buy. The consumers, the traders, the investors looking at this market during this candle said, hey, you know what? The dollar CAD looks like a bargain. And I want you to recognize another component to this. This is a little bit more of an advanced topic, but as we zoom in here, notice how this candle, not only did it closed near the high of this bar. And this is something that I like to pay attention to in my price action. For example, you can see that we actually closed, we opened down here, we went green, 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 green for the entire day of this trading. By the way, this is a daily chart, but all of this stuff is applicable to, you know, the hourly, the 15-minute, whatever chart you're looking at. What I want you to recognize is that we identified a zone here. We can actually mark this area as a significant portion of the chart. And I want to do that right now. So what I'm going to do is I'm going to take this zone right here. I'm going to take this rectangle and we're going to come back to this. So again, the story that we're getting here is right here around that 1.2515 mark. The market identified this area as a bargain. Okay. This is what we would call a bargain. And I want you to remember this spot because we will be coming back to this. But let's go forward a second. So reading the information that the market just told us, the market just told us that this area is considered a bargain. And it bought up, 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 up. And using that information, we rallied for 4 straight days. And on a 5th day, the market gave us new information. So again, if you're looking at this, let's say that you identified this area as support or a buy zone, which is what we're going to call a demand zone. So that area that we just used the word bargain, I want you to think of this as our demand zone. Okay. So this is what we would call demand. Demand, the simple concept is the market is demanding. There's a high demand for buying down in this area. I want you to think about that as we go forward. So then the market rallies 1, 2, 3, 4 days in a row. But on the 5th day, we get a very different looking candle. Now, if you're a bit more of an advanced trader price action wise, you would recognize this as there's a couple different candlestick patterns that you could call this, maybe a pin bar, an inverted pin bar. You know, I think that there's like doji candles or what do you call it? The gravestone doji. There's all sorts of different names. Yeah. So the gravestone doji, right? Very simple concept. You can kind of see right there if we zoom in just for a second. It kind of looks like that. It's not exactly, but the idea being this candlestick pattern is something that we can recognize. In fact, a lot of traders will use this information because look at what the market told us next. Again, we are looking for patterns. We are looking for clues. We are looking for information that the market can tell us so that we can go and use that. So the market came up here, right? We had a strong rally for several days, and then we had this candle. Now, again, let's do a little bit of reconnaissance. We had the open here. We had the high way up here, and we had the low and the close. So if we actually were to zoom in, if we were to take a look at this on the 1 hour chart, what we would basically see, we would see the market rallying for a 5th day. If we were to zoom in on this candle, let's imagine that we're zooming in, right? If we were to zoom in, we would see something like this, a big rally in the first half of the day with a sell-off in the second half. And if you're thinking about this, think about this as like a football game or a baseball game or basketball game. Let's say that the first team starts winning the game and they're way ahead. But in the second half, there's a comeback. What does that tell you? There's a good solid chance that the comeback kid might come back and win the game. And that is exactly what we are going to use when we call this area a level of supply. Okay? This is an example of supply. Why is this supply? Because the sellers in this area were much heavier than the buyers. Think of the price action per candle as a game of tug of war, right? When you're playing on the playground as a kid and there's a team on each side of the rope and there's one team is pulling this way and one team is pulling this way. The stronger team wins, right? Or at least the team that's the better team wins. Same concept with these candlesticks and looking at the price action that we are seeing. We're studying the market participants and what they're telling us. Now, not only did we identify this as supply, but we fell for days after. So we'll put supply and look at this. Not only did we sell off, we sold off hard for a couple different days. We sold 2 days straight of just hefty selling. So this information tells us something. This tells us that in this area, going back to our original idea where we were talking about the oscillation of the price of a stock, currencies have something similar. You can see here, demand. You can see here, supply. We are spotting areas on the chart that we may be able to use in the future. Now, do you remember when I said, let's keep in mind this area right here, this demand zone? Well, if we look at what happened next, we sold all the way back down, but look at this. This is the cool thing about price action. We sold off big, so supply came in, sold. We fell all the way back, and look where we stopped. Remember, this area is demand. Price comes back to demand, and what does it do? It rallies again. And so understanding what the market is telling us at this area could have potentially set us up for a trade, okay? So this is how we are going to use price action at these major levels of demand and supply. There are so many different strategies and approaches to the markets, and technical analysis is a very deep conversation that we can have. We've put together a PDF download that we're going to send to you 100% free. It's a technical analysis handbook full of strategies, methodologies, and concepts. And if you're the kind of person that is a visual learner, this PDF is something completely for you, and it is 100% free. All you've got to do to get access to our technical handbook, which we spent several hours making, is you can shoot us a message on Telegram and send the words technical handbook to us. We'll send you a copy 100% free. When we recognize these major spots on the chart, you can use that information. So for example, let's say that we recognize, okay, big supply coming in here. Cool. We're probably headed back down. Where's the logical place for this market to go? Remember, look at what the market told us before. Probably back down to demand. We see the market fall all the way down to demand, and now we have an action. Let's say that after doing our analysis, we decide we'd like to be long on the US dollar against the Canadian dollar. And let's say we buy this market. Now, this is where stop loss management and all that sort of stuff comes in. What I've done here is I've added the long position tool, which is something that you can add on your TradingView if you're using TradingView to analyze your charts. But what we've done here is we've identified that level of demand. We've identified fundamentally the idea behind, okay, this area seems to be a strong area for buyers. Price comes back down to that area. We say, okay, let's take a buy here. Now, this is the second half. You may have an idea of where the chart is potentially going to find demand, but it's never a guarantee. The markets will do some crazy things sometimes, and supply and demand sometimes changes. What was supply in the past may change and, become demand in the future. But what I want you to recognize is that this level of demand here is something that we can use for potential trade ideas. So let's say that we identify that, price is finding demand around here. We want to buy this market, and we want to put a stop of about 50 pips underneath. And again, this is a daily chart, so this is something that you may want to change up. But let's say we want to target. Where do we want to target? Let's think about this for a second. We just traded based on price coming back down to demand, and where have we identified supply? Well, right up here. Now, how you draw this is sort of a little bit up to you. Some people will draw the demand based on the entire wick. For me, I personally prefer to use the bodies of candles like this. So where am I going to target? I'm going to target back at supply. Again, I'm using the information that the market's telling me. So in this situation, market comes down to your level. You've got that demand spotted. Big green candles telling us that, hey, there's strong buyers, strong hands down in that area, we take the buy, we put a stop below structure in case the market does some craziness and falls through the floor. We don't want to get in big trouble, so we're putting a small stop and we're looking for price to rally back to supply. We are doing exactly what we started out in this video doing. We are talking about the stock or whatever asset it doesn't matter if you're looking at stocks, crypto, Forex, commodities, the idea is the same. We are looking for points where things are considered relatively overbought, oversold, bargains, and good sale points. That's exactly what we are doing. We are being the modern day merchant with this concept of supply and demand. So as we come down to this level, we buy into this market, we look for a stop loss below structure in case price goes against us, and we look to profit at a point that makes sense based on our analysis as well. And this is the simple idea behind supply and demand. Now, please remember there are much more things that we need to get into in terms of Forex. We need to talk about position sizing. We need to get into a lot more of that. So we're going to keep going, but I want you to just know that this is just the first part. This is just the identifying, the technical analysis, the price action behind this sort of concept. And what you can start doing is you can start going through your charts and recognizing where the market is telling you key information. Now you can start zooming out. You can do this on many time frames. It's a video for another topic. For example, right? You can sort of zoom out and identify major levels. For example, there's a major level of support, major level of demand. And generally speaking, for me, what I like to look at, the higher time frame major levels, the higher the time frame, the more important the major levels, because more people are going to see them. When you're trading on, I'll give you a really easy example. Let's take a look at the S&P 500. This is something that everyone looks at. The previous high is going to be a major level, right? And a relative bottom is going to be a major level. This is what everybody is looking at. So they have a lot of power. So you look at these major levels and you start playing around with them. That's information that you as a trader can really use to your advantage, knowing that everyone's looking at the daily chart, right? That's a big level. Not everybody is looking at the 15-minute chart. You have a much smaller audience that's looking at the 15-minute chart than the audience that's looking at the daily. This is like everybody that, even mildly invests looks at the daily chart every once in a while. So that's something to consider, is those higher time frame levels of support and resistance or supply and demand are very important to consider. But fundamentally, the idea is the same. We are looking for spots on the chart where there exists a heavy collection of sellers or heavy collection of buyers. Now, if we go back down, for example, on the 1 hour chart, what we can see here is that there is some relative demand and supply even in a trend. So here is an example of a market that's not necessarily trading sideways. Our original example was kind of looking at this concept, right, where we're looking at sideways markets. Now, when we change this to a upwards market, things become a little bit different, okay? So when you're in the context of a upward market, supply and demand becomes a bit different. Now, there are different schools of thought when it comes to this stuff, but for me, if we are trending up, I pretty much ignore the sell signals. Okay, now this is my personal opinion. There are people that probably will disagree with me on this, but for me, in an upward trend, we're going to be identifying support and resistance levels, but I'm going to be focusing more on the supportive levels. I'm going to be going with the trend, and I'm going to have a buying bias. When the market's trending up, I'm not going to be looking to short it. When the market's trending down, I'm going to be looking to short it, and I'm not going to be looking to buy it. That's sort of a trend following concept that we can get into in a future video. But the main point here is when we're looking at supply and demand, when we're looking at support and resistance, what we're going to be focusing on here, example right here, we're looking for levels of support. A supportive market, we're looking to go with the trend. We're looking to go for buys. So for example, here's a level of resistance. And I want you to focus on this for a second because again, we can get into our price action again and think logically about what we are seeing. This is the break and retest. It's one of the most common and one of my personal favorite ways to enter the market. Okay, so here's the concept. When we look at something like this, we identify a point of resistance, just like we did in the original parts of this video where we identified, a high point, a selling point. This is what we would call a selling point. We can see it right there in the market. The market came in and said, hey, this is a good point to sell. And so that's what happened. But then remember, we are in an upward trend. How do you identify a trend? Well, there's a couple different ways. And again, that's sort of a video for another topic. You can do it with moving averages, for example. If you have moving averages agreeing to the upside, that would be an upward trend. This is the 20, the 50, and the 100 simple moving average. You could try that out on your chart. Another way is to use higher lows and higher highs, which is another thing that we can identify. Basically, a lot of you guys probably already understand this, but for new traders, higher highs, higher lows. We're just simply looking for points on the chart where we are seeing a consistent bid to the upside, right? We're seeing higher highs, the market's being pushed higher, and the dips are steadily rising as well. That is a simple identifier of a strong upward trend. So when we start identifying back to the concept here today, where we're talking about supply and demand, we're looking for this sort of scenario. We're looking for major levels of resistance, but again, since we're looking for an upward trend, we're looking for breakouts. So not only are we looking for breakouts, but now this has told us something a bit different about the market. We identified this as a sell point previously, but now the market's told us something different. This is new information, right? This new information tells us that the market now sees this area not as a level of resistance or supply, but as a level of demand. Buyers are strong here. Okay, we're going higher. Now, if that level comes back into play, what did the market tell us? The market told us that the market is now a buy here. And so we can use that information to trend follow, to go with the trade, and to go into the next level. So for example, when we look at this example here, right, we have a selling point. But then what does the market tell us? Comes up to this level, tries to sell, but no, the sellers are beaten, the buyers are in, and then, perhaps on a retest, we could be looking for continuation. So let's say, for example, we're looking here, we put a stop loss. Stop loss placement is a whole nother topic that we can talk about, but for me, generally speaking, what I'm looking for is I'm looking to just identify structure. Again, I'm using structure, I'm using supply and demand over and over. And let's say we identify this spot here, we consolidated on the lower time frames, we broke out. So I'm looking for a stop loss to not go much more than that. And then I'm looking for good risk to reward. Again, similar theme over and over on this idea. But again, what we've done here is we've identified that simple concept that we just discussed, the break and retest, using supply and using demand. The market told us here that there was a major increase in demand. Let me clean this up a little bit. The market told us here that there was a new wave of demand coming. So demand. Market comes back into that area. What do? Now this level is demand. This level was supply. It was supply over here. Market sold off. But on the breakout, we now identify that area as demand. We identify that as area as demand, and then what do we do with that? Well, when price breaks out and gives us that second chance to potentially enter, we're looking for the opportunity to go with it and to trade with it. Again, using structure to our advantage to place stops. The same way we're going to be entering the trade is the same way we're going to be managing the trade, whether we're targeting a certain structure point of resistance or, whether we are looking to stop out. We're going to use stops. With our stop loss, we're going to use structure. With our targets, we're going to use structure. And again, maybe that's a video to come up next. Thanks for watching today's video. If you enjoyed it, make sure to hit the thumbs up down below and subscribe. We've got more videos just for you if you're an aspiring trader, if you're trying to improve. Check out the rest of the channel. There's plenty of stuff that may be beneficial to you to help you grow as an aspiring Forex trader.